Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Anta Sports Products Limited annual report. Anta Sports Products Limited offers a wide range of businesses and services across various sectors. At the core of their operations are the design, development, manufacture, market, and sale of professional sports footwear, apparel, and accessories for different sports categories. Their product portfolio is extensive, encompassing running, cross-training, basketball, golf, skiing, camping, hiking, tennis, and other sports under various brand names such as FILA, ANTA, DESCNTE, and Maya Active. They also cater to specific markets with brands like FILA KIDS, AMER, and KOLON Sport. In addition to product manufacturing, the company provides a range of services including logistics, property management, information technology, trademark holding, management, product design, sports training, and shoe sole manufacture. Furthermore, they are involved in trading and retailing of sporting goods through both physical stores and online platforms. Overall, Anta Sports Products Limited's diverse portfolio of businesses and services positions them as a comprehensive provider for the global sports industry. Anta Sports Products Limited market capitalization of $209 billion is significantly larger than the average industry peer of roughly $2 billion. This shows that Anta Sports Products Limited holds a significant advantage in their industry. Anta Sports Products Limited trades at a higher price-to-earnings ratio of 14 times and a higher price-to-book ratio of 2.84 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company maintains a moderate leverage profile, with liabilities making up 41% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have increased consistently as the company expands. Importantly, both assets and shareholder equity have grown at least 20% faster than liabilities, indicating that the business is expanding substantially and generating value after covering its obligations. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The company have a dividend yield of 2.86%. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. The primary drivers of revenue growth or decline in a company's performance can be identified through various factors. On one hand, revenue growth is driven by several key areas. Firstly, the mass and high-end sportswear markets have been significant contributors to revenue growth. The company's brand portfolio, which includes Anta, FILA, DESCNTE, KOLON Sport, Jack Wolfskin, and Maya Active, has also played a crucial role in driving revenue growth. Furthermore, global expansion through AMER Sports, Inc., as well as the acquisition of iconic sports and outdoor brands such as Arc'teryx, Salomon, Wilson, Peak Performance, and Atomic, have contributed to revenue growth. In addition, the Anta segment has experienced significant growth, with a 21.2% increase in revenue compared to the previous year. The company's e-commerce business has also grown, particularly in the FILA segment. Expansion into new markets and product categories, as well as growing demand for outdoor sports products, have further contributed to revenue growth. On the other hand, revenue decline is driven by several factors. Firstly, a decrease in gross profit margin due to increased investment in performance products and e-commerce business has led to revenue decline. Additionally, a decrease in sales to largest customers and suppliers has also contributed to revenue decline. Furthermore, changes in consumer trends and structure, as well as increasing competition in the domestic sportswear industry, have also impacted revenue. Overall, revenue growth is driven by strategic expansion, brand portfolio, e-commerce business, and growing demand for outdoor sports products. In contrast, revenue decline is driven by decreased gross profit margin, sales to largest customers and suppliers, changes in consumer trends, and increasing competition. Net income and profit margins. A mixed picture. The net income of the company has experienced fluctuations over time. Initially, it decreased by 7.8% from RMB 16,989 million to RMB 15,662 million. However, in a later period, it increased by 13.9% to RMB 13,588 million. The decrease in net income was also observed in another instance, where it dropped by 8% from RMB 16,989 million to RMB 15,662 million. Profit margins have also undergone changes. While the gross profit margin decreased by 0.2 percentage point to 62%, the operating profit margin increased by 0.4 percentage point to 23.8%. However, the net profit margin saw a decline of 4.5% from 19.5% in 2025 to 24% in 2024. Segment-wise analysis reveals mixed results as well. The ANTA segment experienced decreases in both operating and gross profit margins, while the FILA segment witnessed an increase in operating profit margin but a decrease in gross profit margin. The reasons behind these changes are attributed to increased channel costs, rents, staff costs, e-commerce platforms, social media channels related costs, and operational complexity. Additionally, the decrease in finance income/costs due to lower average interest rates on bank deposits also contributed to the fluctuations in net income and profit margins. The company's financial performance indicates a strong ability to generate cash from its core operations. A positive net cash inflow from operating activities of RMB 20,996 million is a clear indication that the company is generating sufficient cash to cover its operational expenses and investments. Furthermore, the free cash inflow of RMB 16,106 million suggests that the company has a significant amount of cash available for distribution to shareholders, debt repayment, or strategic investments. This level of positive operating cash flow demonstrates the company's financial stability and ability to sustain its growth trajectory. The company's debt level and interest expenses have undergone significant changes. While total debt decreased by 16.7% from $21,664 to $17,906 on page 138, it increased by 5.4% from RMB 52,211 million to RMB 55,021 million on page 163. This inconsistency suggests that the company's debt level is not stable. Interest expenses have also seen a notable increase in some instances. For example, interest expenses rose by 33% from RMB 626 million to RMB 833 million on page 141. Similarly, interest expenses increased from RMB 67 million to RMB 844 million on page 164. These increases indicate that the company is paying more for its debt. The gearing ratio, which measures total borrowings as a percentage of total assets, also saw an increase from 18.5% to 18.7%. This suggests that the company's reliance on borrowed funds has increased slightly. Overall, these changes suggest that the company's financial situation is becoming increasingly reliant on debt, leading to higher interest expenses. The company's performance was impressive across various segments and regions. The ANTA segment saw a 3.7% revenue increase, while the FILA segment experienced an even higher growth of 6.9%. Notably, the All Other Brands segment achieved a remarkable 59.2% revenue increase, showcasing exceptional performance. In terms of product launches, the company made significant strides in various categories. The skiing segment launched its 2025 Alpine Ski Apparel collection, while the triathlon segment introduced new high-performance footwear and cycling series. The golf segment applied its proprietary design system to optimize equipment across 4 dimensions. Additionally, the children's segment expanded its product offering to cater to younger consumers' needs. Geographically, China emerged as a strong performer, with the company hosting an annual showcase at its global flagship store in Beijing and showcasing official uniforms for the Chinese national alpine ski team. The region also saw growth in the sportswear market, which performed well overall. Furthermore, the female consumer market and outdoor sports product demand also showed significant improvement. Management is optimistic about Anta Sports' future prospects, driven by its commitment to growth through innovation, product strength, organizational capability, and operational efficiency. The company aims to unlock the potential of both mass and high-end sportswear markets through its all-round brand portfolio, with a focus on branded sportswear business and delivering an all-rounded consumer experience. To achieve this goal, Anta Sports is pursuing a single-focus, multi-brand globalization strategy, which involves expanding globally through strategic acquisitions and investing in technological innovation. The company is also fostering an open and collaborative innovation ecosystem to drive breakthroughs in key technologies such as AEROVNT0 and basalt fiber. Management acknowledges that intensified market competition may impact future revenue and profitability, but remains committed to its growth strategy. To mitigate risks, the company is continuing to review and monitor risk management and internal control systems, promoting an anti-corruption culture within the group and prioritizing sustainable development. Overall, Anta Sports' outlook is focused on driving growth through innovation, product strength, and operational efficiency, while also prioritizing sustainability and consumer experience. The company has made significant strides in its business strategy through acquisitions. One notable example is the acquisition of Jack Wolfskin, a prominent German outdoor brand. This move not only expands the company's product offerings, but also enhances its presence in the global market. In addition to this, the company has proposed an acquisition of a 29.06% stake in Puma, a globally renowned sports brand. This strategic move is expected to further boost the company's reputation and competitiveness in the industry. With these acquisitions, the company is poised for growth and expansion into new markets. The company has demonstrated its commitment to returning value to shareholders through both dividend payments and share buybacks. Over the past 2 years, the company has paid out significant amounts in dividends, with RMB 6,071 million distributed in 2024 and RMB 6,585 million in 2025. In addition to these dividend payments, the company has also engaged in share buyback activities, purchasing a total of RMB 1,210 million worth of shares in 2024 and RMB 1,586 million in 2025. These actions indicate that the company is prioritizing shareholder value and is committed to rewarding its investors through both cash distributions and strategic capital allocation decisions. There are concerns about inventory buildup and supply chain disruption evident throughout the report. The data suggests that the company is holding onto inventory for longer periods, with average inventory turnover days increasing from 123 in 2024 to 137 in 2025. This trend is also reflected in page 52, where a significant increase in average inventory turnover days, 14 days, and high inventory as a percentage of current assets, approximately 91%, is noted. Furthermore, the company has written down inventories amounting to RMB 174 million, indicating potential overstocking issues. The management's application of judgment in determining net realizable value may also suggest that they are struggling to accurately assess the value of their inventory. Additionally, the significant increase in finished goods inventory by 15% from 2024 to 2025 raises concerns about supply chain disruption and potential stockpiling. Overall, these findings indicate that the company is facing challenges in managing its inventory levels, which may lead to supply chain disruptions and decreased overall performance. That concludes the financial summary for Anta Sports Products Limited. Feel free to comment below, and I will be happy to answer them when possible.